Good morning, students. Welcome you all once again. And today we are going to cover one of the interesting standard on the asset side. Students, today we are going to talk about Ind AS 40, investment property. If we talk about in IGAP, in accounting standard, we do not have any standard titled as an investment property, right? Between AS1 to AS29, we don't have any accounting standard on investment property as such. While accounting standard 13 talks about a concept of investment property, but there is no full-fledged, no separate standard in accounting standard. Globally in IFRS, there is a IAS 40, which talks about investment property. And from IFRS, we have converged to Ind AS with one difference, right? So between IFRS and Ind AS, there is one major difference, which I'll talk about in the later part of the session. But otherwise, IFRS, IAS 40, and Ind AS 40 is typically same except one major difference. Okay, students, this is a very small and I would say sweet standard. This is a short and sweet standard. We will be covering this standard today itself, right? So there is a one class only for this particular standard because it's a very small standard. If you see the ICAI study material on Ind AS 40, so ICAI study material is I believe spreading around 34 or 35 pages, including your question, answers, everything. Okay. So let's start the journey of investment property. Let's understand the investment property. Students, as I told you, when I started the first asset-based standard, which is Ind AS 16 property, plant and equipment. Okay. So at that point of time, I have told you that whatever concept I'm explaining you, these all concept will get repeated in the future standards like Ind AS 38, like Ind AS 40. And if I talk about Ind AS 40, this Ind AS 40, 80 to 85% concepts are from Ind AS 16, property, plant and equipment, right? So if you understand Ind AS 16, probably your 80% of Ind AS 40 has already been covered, right? And if you remember, when I started my session on Ind AS 16 and when I started the definition of property, plant and equipment, you remember the definition of property, plant and equipment? It's a tangible item which is held for production, or which is held for use in the production or supply of goods and services, which is held for rental purposes and which is held for administrative purposes, and the life is more than one period. There, I have given you one exception. And what was that exception? That exception was if a land and building is held for a rental purposes, then it is not a property, plant and equipment. It is an investment property. This is what we discussed in Ind AS 16, correct? And so far, we have already covered Ind AS 16. We have covered Ind AS 38 intangible asset. We have covered Ind AS 23 borrowing cost. And now we are going to cover Ind AS 40 investment property. You will find so many concepts which were covered in Ind AS 16 and Ind AS 38. The same concepts are there in Ind AS 40. Okay. So whenever you will prepare for examination, first cover Ind AS 16, then Ind AS 23, then Ind AS 38, then Ind AS 40. This should be your sequence to understand, to learn, to repeat. Okay. And always target, whenever you will prepare your schedule for exam studies, always target to cover these four standards at one go. Always target to cover these four standards at one go. For example, if you are preparing a schedule for revision of FR for your CA final, and if you have allocated 3 hours or 4 hours in for FR in a day, so in those 2 to 3 hours or 4 hours, just cover this four standard in one go. Okay. So I can see a lot of students have joined. So let me meet and greet those students who all are there. Abrikesh is there. Good morning, Abrikesh. Good morning, Anila. Good morning, Mamta, Niranjan, Ginny, Stephen, Vignesh. So good morning, everyone. And let me meet the people who are not on the Zoom link. So good morning, Rajesh. Good morning, Rahul. Good morning, Nikita. Good morning, Rajat. Okay, so good morning, students who all have joined on YouTube or who all have joined either offline or online. Good morning, everyone. Good morning, Tushar. Yes. Friends, talking to the agenda of Ind AS 40, we'll talk about objective and scope, so very theoretical aspect. Then the most important aspect, we'll talk about the definition of investment property. We'll discuss owner-occupied property. Then we'll talk about recognition, when to recognize, how to measure, and what happens when there are transfer and disposal. Means if an investment property has been transferred to property, plant and equipment or to inventory, how the accounting needs to happen. And if an investment property has been sold out, then what is the accounting for disposal and the disclosure. Dear friends, from the perspective of Ind AS 40, right, the word owner occupied property has been used for property, plant and equipment, right? This owner occupied property is nothing. It's a property, plant and equipment. Okay. So if in your examination question, if the question is testing you the concept of Ind AS 16 and Ind AS 40, and the question will tell you the company has a building. The company has two buildings. One is located in Delhi and another is located in Mumbai. And the Delhi building is used for earning rental purposes. And the company has used the Mumbai building as a owner occupied property. Okay. Then in the question, some cost is given, some other aspect is given for depreciation. So when the question is telling you one building is for rental purposes and the other building is used as a owner occupied property, what is meant by owner occupied property? A property which is occupied by owner. Means the property which is occupied by owner means owner is using that property for the administrative purposes, for the business purposes, for the headquarter purposes, for the office purposes, right? So if it is an owner occupied property, it is nothing. It's a property, plant and equipment. You have to apply the principle of Ind AS 16 for the measurement, for the depreciation, for everything you need to apply Ind AS 16 concept. So my dear students, in Indian accounting standard, there are two names of property, plant and equipment: property, plant and equipment and owner occupied property, right? Why the word owner occupied property is used? Why not property, plant and equipment in Ind AS 40? Just to distinguish, just to segregate that either it is a tenant occupied property or either it is a owner occupied property. Why? Because as I told you, investment property is a property which is held for investment. अब अगर आपने प्रॉपर्टी खरीदी है इन्वेस्टमेंट पर्पस से तो रिटर्न क्या आएगा? In that case, either you will earn rentals or you will earn by way of capital appreciation. By way of capital appreciation. It is long term, not short term, right? For example, if you have purchased a property for the purpose of resale and your business is to sell and purchase, in that case, it was an inventory, not an investment property. But you remember, our father, our grandfather used to say always that if you have surplus money, just buy a plot, buy a land, buy some real estate assets, okay, and leave it, forget it for the next 5 to 10 years. What does it mean? It means they are talking about just buy a small piece of land and forget about 10 years. Means they are talking about capital appreciation. That asset is held for capital appreciation. Okay. So friend, this is the context. Now we are moving into the actually moving or delving into the standard. This is a very small standard. Okay. And probably we will be able to cover this standard in the next 2.5 hours itself. Okay. Objective. The objective of this standard is to prescribe. The objective of this standard is to prescribe the accounting treatment. What are the 4 pillars of accounting? What are the 4 pillars of accounting? Can anyone tell me quickly? RMPD. Very good. Yes, very good. Recognition, measurement, presentation, disclosure. I think you will always remember in this RMPD in your lifetime because you guys are chartered accountants, right? So this standard talks about the RMPD for investment property and related disclosure requirement, right? Recognition, measurement, presentation, disclosure of investment property. Why? This standard is only in one investment property. Scope. This standard shall be applied in the recognition, measurement, and disclosure of investment property. This standard does not apply to biological asset, mineral rights, and mineral reserves. I don't know why this scope out has been given. This standard does not apply to. Tell me, if a company has purchased a machinery for the purpose of earning a rental on those machineries, is it an investment property? In your property, plant, and equipment, whether machine comes under property. Property means land and building. Property means land and building. Whether machine is a property, machine is not a property, it's a plant and equipment, right? So friends, this standard has just given this theoretical part. Don't worry about that. Just forget about this scope part. Remember the definition of investment property. Investment property is a property held for investment. What is meant by property? आप property किसको बोलते हो? What is meant by property? I'm waiting for the answer. What is meant by property? Land and building? Land is a property, building is a property, correct? Are you telling your car as a property? Have you ever told someone that this is my property? I don't think so. I don't think so. You are calling car as a property. You are calling car as an asset, correct? You are calling car as an asset, not as a property. Okay, not as a property, right? But for all land and building, you are saying that I have good properties, I have enough properties, I have properties worth rupees 10 crore. Means this standard only talks about two assets. Which two assets? Which two assets, Vignesh? Land and building. Land or building, right? Either it is only land or only building. Either it is land and building, both, correct? So two assets for two purposes. What are the two purposes? What are the two purposes? If two assets acquired for two purposes, if two assets acquired for two purposes, it will be qualified as an investment property.
Rental and price appreciation.
Rental and capital appreciation. Very good, Abrakesh.
Yeah, capital.
Rental and capital appreciation means a company like Britannia Industries Limited. You will find the disclosure of investment property in the books of Britannia Industries Limited. So Britannia Industries Limited has invested in a building. They have purchased a building. And what was the purpose? Their purpose was to purchase the building to earn rentals. To earn rentals. Britannia business is not only to earn rentals. Britannia business is to sell biscuits. So they have invested in a property for the purpose of earning rentals. Or they have some land also. And they have purchased this land near Greater Noida Expressway when it was jungle, right? And what was the objective of purchasing those land? They purchased the acres of land at a very nominal price because that time no habitation was there. And their objective was, since the price is not too much, invest in the land and keep it for 10, 20, 30 years. When we'll have a good price, when the airport will come near to that land, when the habitation will get started, when the expressway will get constructed, then we will sell off this land. So what was the objective? The objective was, from the building, the objective was to earn rentals, and from this land, their objective was to earn capital appreciation. It's a capital which needs to be appreciated. So these are the long-term plans. These are the long-term plans. Just stock market में कहते हैं ना कि अच्छे शेयर में invest करो और भूल जाओ. Right? It will give you multi-bagger return. It will give you good return in long term. So what is that? That is capital appreciation. Your capital will be appreciated, right? So friends, two assets. Which two assets? Only two assets, land and building. If it is held for two purposes, rental and capital appreciation. If these two assets are held for two purposes, then it will qualify the definition of investment property. Then it will qualify the definition of investment property, right? Is that clear? Is that clear? So land and building, if it is held for rental and capital appreciation rather than for use in the production or supply of goods and services, if a company is using that building for the purpose of running their head office or for the purpose of their factory, is it an investment property? No. Then what is the classification of that building? What is the classification of the building? PP, very good, Ginny. PP, property, plant and equipment, right? Or DLF. DLF is into the business of purchasing and selling building and land. What is the nature of that building and land? DLF का काम ही building बेचना खरीदना है. Inventory, it is a inventory. It is a inventory. It is not a investment property. It is a inventory. Correct? Is that right? Is that right? Okay. So friends, let me take you to the Excel file, just explain few concepts and then I'll again come back to my PowerPoint presentation. So as of now, we have understood this is a very straightforward standard, right? I don't know why standard is given scope out, not for this, that. Very straightforward standard. Two asset for two purposes is equal to investment property. Correct? So what is the definition of investment property? Definition. What is the definition of investment property? Land and building, two assets, right? Land and building, if it is held for rental or capital appreciation, is equal to investment property, is equal to investment property. Okay. So land and building, if it is held for rental or capital appreciation, then it will be qualified as an investment property, right? So only two assets and there are two purposes, right? There are two purposes, either of the two purposes, right? So not both, it is and, okay, or. It is or, not and, it is or. Okay. So two assets, if it is held for any two purposes, then it will qualify as an investment property. Okay. Friends, this land and building, either a company will acquire a land and building, the company will purchase a land and building, or the company will take a land and building on a lease basis, on a rental basis, right? So how this land and building will be acquired? How this land and building will be acquired? So land and building is acquired in two ways, right? What could be the two ways to acquire a land and building? कौन-कौन से दो तरीके हो सकते हैं? पहला, purchase the land and building. Purchase the land and building. You can purchase the land and building. Means when you purchase the land and building, it means you are the owner. You are the owner. When you purchase the land and building, you are the owner. Second, take the land and building L and V, land and building on lease basis. On lease basis. So what you become? When you are taking an asset on a lease basis, land and building on lease basis, what is your name in that case? Whether you will be owner or you will be someone else. You will be lessee. Very good. You will be lessee. Very good. You will be lessee. Okay. So friends, if you are the owner, then either the asset should be PP or it should be investment property. You have purchased the land and building. So what will be the classification in the balance sheet? If you are the owner, then what is the classification in the balance sheet? Tell me, for this land and building, what is the classification? In balance sheet,
Freehold.
On the asset side, what is the classification? Either this land and building is a PP, either land and building, either it has to be PP, okay, or this land and building is a investment property, correct? इन दोनों में से कुछ हो सकता है ना? अगर आप ऑनर हो तो, ऑनर का मतलब आपने परचेज किया है, Correct? Either it could be PP or it could be investment property. When it will be investment property? It will be investment property if the purpose is on rental or capital appreciation. It will be PP. Why? If it is used in the business, either for running your head office, corporate office, headquarter, godown, factory, correct? Used in the business. ये सब क्या यूज है? बिजनेस यूज है, right? But if it is taken on a lease basis, then what? If it is taken on a lease basis, then what? So when you are purchasing, these are the two classification when you are purchasing. But if you have taken on a lease basis, then what is the classification? Then what is the classification if you take the land and building on a lease basis? Balance sheet में क्या classification आएगा? Do you have any idea? While I have not covered Ind AS 116 as of now, but do you have any idea? You know, I have covered Ind AS 23, borrowing cost standard. There, I have given you some knowledge about Ind AS 116. Some knowledge about Ind AS 116. Right of use asset, lease liability. So if the lessee is taking the land and building on a lease basis, then which asset will be there? In that case, that land and building is taken on a lease basis, then the name of the asset is right of use asset. Right of use asset. Right of use, right? Now, friends, when you read Ind AS 116, Ind AS 116 says that if a lessee has taken some asset on a lease basis, right? In that case, right of use asset is going to be capitalized in the balance sheet. But what should be the classification of the right of use asset? Is it a PP or is it an investment property? What should be the classification of that right of use asset?
Depends whether it's used for production or business purpose or investment purpose.
Yes. So Abrakes has very well explained. Depends. Depends means if the company has taken a building on a lease basis, the company is paying rental. Now you need to see the purpose why that company is paying rental for acquiring this building on a lease basis. Because the company is using that building in their business. The company is running their godown, warehouse, factory, head office, okay, administrative office. So the company is using that building for a rental basis. You guys have seen your chartered accountant office, which is on the basis of rental. आप लोगों ने देखा होगा सीए के ऑफिस. अगर किसी ने सीए का ऑफिस रेंट पे ऑफिस लेकर अपना काम स्टार्ट किया है, so what is the nature of that right of use asset? The nature of the right of use asset is PP. But the company, and in Lakshmi Nagar, you guys must have seen hostels also. Okay. So what people are doing, they are taking some floor on a rental basis, on a lease basis, right? What is their purpose? Their purpose is to sublease. For example, I have taken one floor from the landlord, from the lessor, and I am paying 50,000 rental. And what I have done? There is a 3-bedroom flat. So I have taken this flat from the landlord, from the lessor. I become the lessee and I am paying rental of 50,000 rupees. I'm not using it for my own purpose. I'm not using it for my business purpose. What I have done? I have subleased this asset to 6 CA student. And every CA student is paying me 10,000 rupees each. So what is my total collection on a monthly basis? 60,000. What am I paying? 50,000. So I have given it on a sublease basis. Okay. I have subleased. So what is my purpose? My purpose from that asset is to earn rental. My purpose from the right of use asset is to earn rental. So what is the classification? What is the classification?
Investment property.
Investment property.
Investment.
Investment property. Yes, investment property. So I believe you guys have understood in this case, if the lessee is using, if the lessee is using this asset for business purposes, then ROU classification will be PP. If the lessee is using this asset for what purposes? For rental purposes, not capital appreciation. आप दूसरे की property पे capital appreciation कैसे करोगे? For the asset for rental purposes, then ROU classification will be investment property. Okay, is that clear? Is that clear? So I believe now it is very much clear to you guys. Okay, so friends, standard says that if a land and building is acquired for the purpose of rental and capital appreciation, it is an investment property. Or if a land and building is taken on a lease basis for the purpose of earning rental, it is also qualified as an investment property. That right of use asset has to be qualified as an investment property. Okay. Fair? Fair? So property, land or building or part of a land or building means floor held by the owner or by the lessee as a right of use asset. But the objective is to earn rental or capital appreciation or both. When both will happen? You have purchased a building, you have leased out that building. So आपने बोला अभी 5-7 साल तो रेंटल अर्न करूंगा, फिर जब अच्छे पैसे मिलेंगे बेच दूंगा. So you have both the intention. You have an intention to earn rentals as well as you have an intention to earn capital appreciation in long term. So it could be both. Okay. But your intent is not to sell, not to earn capital appreciation. Your intent is always to earn rental. होता है ना, कई बार पेरेंट्स कहते हैं कि just invest in a real estate assets, invest in a building and start your passive income. What is meant by passive income? You all are chartered accountants. I mean to say you will become chartered accountant. You all are doing your articleship training. Go to your boss. Your boss means your principal and ask, sir, do you have any investment in investment property? I mean to say land and building. He will say yes. Majority of them will say yes. Then please ask, sir, why you have invested in those building or those flats? So they will say, I have invested in those flats to start my passive income so that for the lifetime, I will be able to earn rental income. Okay. So this part is, I believe, crystal clear to all of you. The summary, the long story short, the crux of the last 15-20 minutes is investment property is a land and building, which is either purchased by the owner or it is taken on a lease basis. And the objective is to earn rental or capital appreciation or both, right? These are the pictures of investment property. On the left side, it is land. On the right side, it is a building. Okay. Examples of investment property: land held for long-term capital appreciation rather than from short-term sale in the ordinary course of business. Okay. DLF का काम ही building बेचना है. DLF का काम ही land बेचना है. Okay. So for them, it is inventory. It is a current asset, short-term asset. It is short-term sale. But if a company is purchasing land and building for the purpose of long-term capital appreciation, in that case, it will be classified as an investment property. Land held for currently undetermined future use. Okay. Vignesh has some money. So Vignesh has a surplus funds of rupees 50 lakhs. Okay. In his neighborhood, there is a plot of land and he has a surplus money of 50 lakhs. His father told him that Vignesh, you have the surplus funds and our neighbor is selling plot because he has to move to America. He is in urgent need of money. So while the market value of this land is 65 lakhs almost, but he is ready to sell at a 50 lakh rupees. Okay. So please invest. Let's buy this plot of land. Vignesh is asking that, Papa, why? Why should we buy this plot of land? What is the need? So his father is telling him, so not to worry about the need. Future में देख लेंगे. Let's see in future. अभी invest कर दो because it is getting at a very low price. Just invest. Okay. So when they are investing, they are not clear what they will do. Because Vignesh is saying, we are living in our own house. We don't need any other asset for constructing our house for own purposes. Okay. And it is a plot of land. We will not be able to earn rental also. Okay. So basically they are not clear what will be the use of that property in the future, whether they will construct their own house in the future, whether they will construct the office in the future, what they will do. So currently this land held for undetermined future use. In that case, standard says that if the purpose and objective is not clear for this land and building, so assume this as an investment property. Okay. A building owned by the entity. Okay. A building which is owned by the entity and which is held for rental purposes. Of course, a building owned by the entity and lease out under one or more operating leases means on a rental basis. Okay. So if it is a finance lease, a building which is owned by the entity, A Limited has purchased the land or A Limited has purchased the building. A Limited has purchased the building. Okay. So let me again go to the Excel file. A Limited has purchased a building. Okay. For rupees 50 lakhs. And they have leased out this building for the majority part of the economic life. For the majority part of the economic life. Okay. The present value of the rentals earned on this building is 55 lakhs even. एसेट 50 लाख का है, लेकिन इन्होंने जिस लीज टर्म के लिए इस एसेट को दिया है, दिस लीज रेंटल पे, दे विल बी एबल टू गेट 55 लाख रुपीज. They will be able to earn 55 lakh rupees, right? Please advise for the classification of the asset in the books of A Limited. I'm giving you 30 seconds. Answer with the knowledge which you are having from CA Inter. Okay. Just think about this and then answer. I'm giving you 30 seconds. Yeah. So one student has given the right answer and I'm happy to see his answer. But I'm waiting for other students as well. A company has purchased a building. Purchased. A Limited has purchased. Okay. A Limited has purchased. And A Limited has leased out. Purchased and leased out. Given this on rental basis. Building held for rental. Okay. Have you heard about operating lease, finance lease? Have you heard about operating lease, finance lease, accounting standard 19 in your CA Inter days? AS 19. Yes, AS 19. So this asset which is leased out for the majority part of the economic life. This company A Limited is earning rental, which is more than the fair value of the asset, which is more than the value of the asset, right? So this company has purchased the asset. This company has given the asset for the lifetime on a lease basis to someone. And this company is also collecting rental, which is more than the value of the asset even. So is it a operating lease arrangement or is it a finance lease arrangement? From the lessor perspective, Ginny is saying it is a finance lease. So if a lessor is giving an asset on a finance lease basis, then what is the treatment in the books of accounts? This asset will be de-recognized. अगर एक लेसोर ने एसेट फाइनेंस लीज पे दिया तो लेसोर की बुक्स में तो एसेट ही नहीं आएगा ना. So in this case, what is the accounting entry? When this company has purchased the asset, the accounting entry was building, since it was for a rental basis, building investment property, account debit, to bank account, Great. 50 lakhs, okay. On the date of purchase. On the same date. Why? Because it is a finance lease arrangement. On the same date, what is the accounting entry on the same date? On the same date, the accounting entry is what? Finance lease receivable account debit. Account debit 55 lakh to building investment property account, to building investment property account credit by how much? 50 lakh to profit on finance lease, P&L credit 5 lakh. So इनकी बुक्स में तो एसेट ही नहीं बचा ना. So the asset is finance lease receivable. In the balance sheet, what is the nature of the asset? In the balance sheet, there is no ROU. In the balance sheet, there is no PP, no investment property. In the balance sheet, the asset is, what is the asset in the balance sheet? In the balance sheet, the asset which will survive is finance lease receivable. It's a debtor. Finance lease receivable. It's like a debtor. Finance lease receivable. Okay. So friends, if a company has purchased an asset and given it on a finance lease, and the question will ask you, what is the classification? You need to tell that. The classification is not an investment property, not a PP. The classification is a finance lease receivable. Okay. Is that clear? It is not a PP, not an investment property, not a ROU. ROU तो हमेशा लेसी की बुक्स में होता है. लेसी की बुक्स में. I believe this is clear. So friends, why I was telling you, always, whenever you will do the preparation for the examination, always plan your studies in a bunch of standard. कभी भी ये मत सोचना कि if today we are reading, if today we are discussing Ind AS 40, the question will come, just one question on Ind AS 40. Answer is no. There could be a question, and not could be, I would say there must be a question which includes the concept of Ind AS 16, Ind AS 116, Ind AS 40, Ind AS 23, which includes the concept of all these 4 standards in one question of 10 marks, let's say, right? The only thing is your conceptual clarity should always be there. For example, in a particular question, in a particular exam question, it will be asked, the company has purchased a building and a machinery, okay, for rupees 50 lakhs and 20 lakhs respectively. The company has given both the assets on a lease basis. The company has given both the assets on a rental basis. Okay. In that case, please suggest the correct classification in the books of this company, in the balance sheet of this company. Okay. So quickly there should be in your mind, oh, this is a land and building. So land and building for rental, it goes to investment property. Other than land and building, rental, it goes to PP, property, plant and equipment, right? So everything has to be run in your mind. Then the question will tell you, the company has purchased this land and building and given it on a lease for a lifetime basis. For a lifetime basis, or for 100 years, for 50 years, for majority part of the useful life. Then there must be a trigger which will run your mind. Okay, so when I have given my asset on a lifetime basis, on a majority life basis, it means मैं तो कभी यूज करूंगा नहीं उस एसेट को, सामने वाला यूज करेगा. It means it is a finance lease arrangement. So I have to de-recognize my asset and I have to recognize the financial asset. I have to recognize the debtor, finance lease receivable. Okay, I have to recognize the trade receivable. Understood? Have you understood? So you have to answer in that manner. You have to just go by the logic, go by the substance. Accounting is not very difficult. In the practical life, even normally, myself as a financial reporting head of a company, when I interview the chart CA fresher, I used to ask this question: what is the classification? Right? If a student has understood, if he is well prepared in CA final, he is always able to respond to my answer. He is always able to give the correct answers. You just need to apply the logic. What is the purpose? What is the intent? Question will ask you that the company is into the business of purchase and sale of land and building. You have to just think quickly. Okay, the business is purchase and sale. It means it is a inventory. Okay, my dear friends. Okay. Yes, a building owned by the entity and leased out under one or more operating leases. Operating leases, not finance lease. Operating leases. Okay. Operating lease में तो asset जो building है वो लेसोर की बुक्स में ही होती है. ओके, बट फाइनेंस लीज में डी-रिकॉग्नाइज हो जाती है. A building that is vacant but is held to be leased out under one or more operating leases. In the COVID time, you know, people have just moved to their house. For example, there are 3 students who have taken a flat on a rental basis in Lakshmi Nagar, Delhi. So when COVID came, all the students have shifted to their hometown. And this flat was lying vacant. So this flat is a property of the lessor, property of the owner, and this property is held for earning rental, but this is lying vacant. So what should we do? If it is lying vacant, can we classify it as a PP? Answer is no. Standard is saying that if a building is lying vacant, okay, but the objective is to earn rental, it is continue to be classified as an investment property. आपने देखा होगा ना, आपने फ्लैट किराए पे दिया है, ओके, किराएदार छोड़ के चला गया. So now you are searching for another tenant. So your flat is remaining vacant for, let's say, 3-4 months, 6 months. So whether the classification will change? Answer is no. It is still investment property. Property that is being constructed or developed for future use as an investment property. Property that is being constructed or developed for future use as an investment property. The company has purchased a land, and the objective is that the company will construct a bungalow, the company will construct a shopping mall, or the company will construct an office complex for the purpose of giving it on a rental basis, right? So this will be an investment property because the future use is clear, right? So friends, we have seen so many examples. If a land and building held for capital appreciation, it is a investment property. Land and building held for rental, it is an investment property. Land and building which is held for currently undetermined future use is not clear, then it will be classified as an investment property. Okay. If a land and building is vacant, right? It is a vacant, but objective is to earn rental, then it is an investment property. If a property which is developed or constructed in future for the purpose of earning rental or capital appreciation, it is an investment property, right? Example, not an investment property. Zini is saying, sir, it means if you will take our interview in future, then we already know one question. You know all the question. Okay. You will be able to answer my all the questions. If you read this FR, not only by mind, but by heart, right? FR is very simple. It's a scoring subject. It's a scoring paper, right? You just need to learn this by heart. Okay. And you have to understand what is the purpose of those assets, right? The entire accounting, the recognition depends on the purpose of the asset. Okay. Yes, what is not an investment property? Simple. Property held for sale in the ordinary course of business. क्या आपको ये अभी स्लाइड से पता लगा है? ये तो पहले से ही पता है. Property which is held for sale in the ordinary course of business, it is an inventory. Property that is leased to another entity under a finance lease. Property which is given on rental basis on a finance lease basis. Sir, finance lease करने पे तो asset ही de-recognize हो जाता है. Right? When you do finance lease, the asset got de-recognized. तो बात ही खत्म. Owner occupied property. What is owner occupied property? Property which is occupied by owner. It is a property, plant and equipment. Ind AS 16, right? Owner occupied property, same. PP held by the owner or by the lessee for the purpose of held for use in production or supply of goods and services. Okay. Or held for administrative purposes. Correct. Now we reach to one important aspect. Sir, we understood. If the asset is held for rental or capital appreciation, it is an investment property. Sir, let's say a company has purchased a building. The building is 5-story building, 5 floors, right? In the 2 floors, the company has kept the 2 floors for their own purposes, means for their business purposes. They are running their godown. They are using the 2 floors for the purpose of maintaining their godown. And 3 floors they have kept for the purpose of earning rentals. Okay. 3 floors they have kept for the purpose of earning rentals. So there is a building which is purchased by, this is the building which is purchased by the company. There are 5 floors. Okay. 2 floor they are using for the business purposes. 3 floor they are using for the investment property purposes, rental purposes. Okay. The question is, what is the classification? What is the classification of this entire building? What is the classification of this entire building? What is the classification of this entire building? Tell me. Friends, tell me what is the classification of this entire building? क्या classification होगा?
If it is separable, then depending on the purpose. So if it can be separated, then the property held for rentals will be as investment property, and for the godown purpose, it will be fixed.
Okay. So let me make some boxes for you guys. Okay. So a building has 5 floors. 2 are used for business purpose and 3 have been given to the tenants. Advise the classification. Example. Okay. And let me just a minute. Just meter. Floor 1. Floor 2. floor 3, floor 4, and floor 5. This is the 5 floors and this is the entire building, right? This 5 floors pertains to the entire building. Okay. Floor 1 and 2, business purpose, and 3, 4, 5, rental purpose. So this building has dual purpose. This building has dual purpose. Standard says that if these portions could be sold separately or lease out separately under a finance lease, मतलब अगर आप इनकी रजिस्ट्री अलग अलग कर सकते हो, अगर आप इनको सेपरेटली बेच सकते हो, then entity has to account for these portions separately. The entity has to account for these portions separately. So the question which is going to be asked, can the above floors can be sold separately? Right? Whether it can be registered separately. आप एक फ्लोर बेच सकते हो separately. Okay, so there is a floor wise registry. Whether it can be registered separately. If the answer is yes, then account for the portions accordingly. If answer is yes, then account for the portions accordingly. Sir, means if this is the case, then it is a PPE. This portion is PPE. This is a investment property. Okay. Can the above floor can be sold separately? If the answer is no, it cannot. The entire building can only be sold in one transaction. The entire building can only be sold, just right. Anyone who is living in Noida? Anyone in this batch who is living in Noida? Noida? No one really? In Noida, what happens? If you see the sectors in Noida, right? So if you see the sectors in Noida, so Mamta is living in Noida. So if you see the sectors in Noida, you will find there are 3 floor, 4 floor, there is a bungalow, right? There is a koti, there is a bungalow, where the 3, 4 floors are there. But in Noida, you cannot sold the floor separately because the registry is not floor wise. The registry is for the entire building. So just last week, I was talking to a property dealer. So he was telling me that Mr. Alok, you can buy a building in Noida. Okay. And it is a good investment. I told why. He told me that, as of now, the floor wise registry is not there. So let's say a building will cost you 2 crore rupees. Okay. But sooner or later, because this floor wise registry is there in Faridabad, Gurgaon, Delhi. So sooner or later, when Noida authority will open the floor wise registry, whenever they will allow the floor wise registry, the prices of the property will shoot up like anything, right? For example, I am getting 4 floors in 2 crores, right? So when the floor wise registry will happen, so probably I will be able to sell this 4 floors, every floor independently at a price of, let's say, 75 lakh, 30, 80 lakh. Okay. Right. So friends, in that case, if I have to sold, if I want to sell my any floor, I have to sell the entire building. I cannot sell one single floor independently, right? So friends, if the above floor cannot be sold independently, separately, or leased out on a finance lease separately, in that case, standard says that in that case, the classification of the building is dependent on the significant portion of the use of the asset. So what is the significant portion in this case? What is the significant portion in this case? What is the significant portion?
Investment.
Investment is the significant portion, right? So in this case, the significant portion, that is 3 out of 5 floors are leased out, and hence entire building will be classified as investment property. Will be classified as investment property. Okay. Clear? Let's say reverse this scenario. Okay, reverse this scenario. For example, if instead of this, if probably this will be the case. In that case, the significant portion, then what is the classification? So in the above case, the classification is investment property. In this case, the classification will be what? Will be PP, right? So what is a significant, sir? What is significant? The significant is the judgment of the management, that how the management is applying the judgment to identify with what is significant, whether investment property is significant or my business purpose is significant. So just a minute. Here it is, R for business use, and hence the entire building will be classified as PP. Sir, what happens if it is equal? What happens if the purpose is dual and the equal portions are used for rentals as well as business purposes, right? Friends, in this case, judgment needs to be applied, right? For example, out of 5 floor, 2.5 floor is for rental, 2.5 floor is for business purpose. In that case, judgment needs to be applied, right? What is more significant? Whether the company is able to utilize these 2.5 floors, or the company is just using this 2.5 floors from the perspective of that the company is not able to lease out this entire third floor. Okay, right? So you need to apply the judgment. What is more significant in that case? Whether the business use is more significant or whether the rental is more significant. Okay. For example, the floors which are used by the company is not able to generate much future economic benefit. The business is into losses, right? But the company is getting a handsome return on the rental part, right? So in that case, the company may apply a judgment that I am getting more future economic benefit by leasing out that property, rather than by using this property in my own business, right? So friends, if it is equal, in that case, management judgment needs to be applied. Standard has not given you any answer. Standard has just told you that in case of a dual use of property, right? In that case, you have to, in case of dual use, you have to split the property and classify the investment property or land and build investment property and PP as per the respective use, if and only if the properties, the portions are able to sold separately or are able to given on a finance lease separately, right? अगर आप उसकी separate registry कर सकते हैं तो जो भी use होगा उसके according करेंगे. But sir, if the use is even, if the use is equal, in that case management needs to apply a judgment that what is more significant. Okay. In the examination question will give you some hint, then you can apply your judgment. You can say that in this case, due to this fact, we are assuming that the rental purpose is more significant, and hence we are classifying this entire property as an investment property, right? Because since the properties are not able to sold separately. So hence we can either classify it as a PP or as an investment property, but we are considering that rental part is significant and hence we are classifying it as an investment property. I hope it is clear to all of you, my dear friends. Any question? These Excel example will always help you. These Excel example. You can see this dual purpose of building. I have given you example and I have given you one by one all the instances. I have given you one by one all the instances, right? So management judgment needs to apply for classification of the asset. Correct? Okay. Now, friends, let's go to the PowerPoint presentation again. So, example, OBC Limited owns a building consists of 10 floors. It uses 7 floors as its own office and remaining three are leased out to tenants under operating leases. Under the company's country law, company can liberally transfer the title of individual floors independent of the other floors in the building. In the given scenario, 7 floors should be classified under Ind AS 16 and remaining 3 floors as investment property since they are able to split the title between the floors. If the portions could not be sold separately, the property is investment property only if an insignificant portion is held for the use in production or supply of goods or services or for administrative purposes. Okay. Ancillary services. Friends, hotel. Have you done the audit of any hotel? Have you done the audit of any hotel like Taj, Oberoi, ITC, Lemon Tree, Hilton? No? Have you seen the balance sheet of any hotel? No? Okay. Have you seen the hotel? Have you stayed in hotel? Yes, all of you for sure. So in hotel, why you are going to hotel? For staying in hotel, right? When you are taking a hotel, are you telling your friends that I have taken a room on a rent basis? Or you are saying that, you know, I'm using that hotel because that the hotel is neat and clean, the services are great in that hotel. आप क्या बोलते हो? आप कभी ऐसे बोलते हो मैंने रूम किराए पे लिया है, या आप बोलते हो कि उस होटल की सर्विस बहुत अच्छी है एंड हेंस आई एम यूजिंग दैट होटल? Yes, we are saying that we are using the service of that hotel, correct? We are using the service of that hotel. Okay. So friends, if we are using the service of this hotel, means in case of a hotel industry, the services are significant. The ancillary services are significant, right? Let's say you are regularly visiting out of station. You are regularly visiting out of station. And you are staying in a hotel. Okay. The room is very good. The room is very good. But the breakfast is very poor. The ambience is very poor. There is no other facility like laundry facility is not there. Swimming pool is not there, right? Some other facilities are not there. The breakfast is very poor. The food is not good. The room is good. Will you stay in that hotel? What is your preference? Will you stay or will not stay? I'm talking about the preference. फ्रेंड्स, मैंने प्रेफरेंस ही तो पूछी है, अभी तक सिर्फ 2 लोगों ने आंसर दिया है. व्हाट इज योर प्रेफरेंस?
No,
राइट ऑन द चैट बॉक्स, because your answer will give the accounting treatment. Correct? Answer will be the accounting treatment. So normally, you all are right. Normally, I would not prefer to stay in that hotel. I would not prefer. Why? Because for me, services are again very important. When we stay in hotel, we use hotel for the comfortable stay, for the good environment, for the comfortable stay, right? So I am talking about a larger answer from a larger audience, right? It's not like that, sir, ठीक है हम तो ऑडिट पे जाते हैं तो ब्रेकफास्ट तो हमारा क्लाइंट के साथ होता है तो स्टे कर लेंगे. So that's a different story. Okay, I'm not talking about what is your preference only. I'm talking about from a larger aspect कि जनरली आप क्या करना चाहोगे. ठीक है, एक ऑडिट पे समझ में आता आप कर लोगे स्टे, बट आपकी प्रेफरेंस क्या होगी? Would you like to stay in a accommodation? Would you like to stay in a property whether you will get all the facilities, right? You'll get a good food, or you want to stay in a property where room is good, doesn't matter the other things are there or not. Doesn't matter if you are calling in night and talking for a mosquito repellent, so nobody replies you. Doesn't matter the person is not giving you good towels. Doesn't matter the person is not giving you toiletries. Doesn't matter, right? So friends, anyone who is using hotel, he is using for the services, not only for the room. He is using for the services. Why? Because the ancillary services plays an important role in a hotel industry. The ancillary services plays a very, 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 very important role in a hotel industry, right? So friends, standard says that what should be the classification of this property which is purchased by a hotel company like Taj, ITC, Oberoi, Hilton, Lemon Tree. In these companies' balance sheet, these companies are purchasing building, hotel building, and these companies are running the hotel business. So the question is, what is the classification of these hotel building in the books of these hotel companies? Is it PP or is it investment property? It is a PP. It is not an investment property because this company is selling a package. This company is not, this hotel is selling a package. This hotel is not only selling the room on a rent basis. Okay. This hotel is not giving the room on a rental basis. So friends, in some cases, an entity provide ancillary services to the occupant of the property it holds. An entity treat such property as investment property if the services are insignificant to the arrangements as a whole. Right? Okay. So investment property कब होगा? जब वो services insignificant है. But in hotel cases, the services are significant. Example, when the owner of an office building provide security and maintenance service to the lessee who occupy the building. Okay. In other cases, the services provided are significant. For example, if an entity owns and manages a hotel, the services provided to guests are significant to the arrangement as a whole. Therefore, a owner managed hotel is owner occupied property, PP, rather than investment property. Right? अगर वो ancillary services insignificant है, आपने security guard दे दिया, you are giving a flats on a rental basis, building on a rental basis, and you have also deployed a security guard. It is a insignificant. Have you guys went to a marriage party? Have you guys attended a marriage of anyone in your family, in your friends circle? Yes. So you must have seen the banquet, the hotel, where this wedding arrangements, where the wedding arrangements were there. So when you go to the hotel or banquet and ask for this wedding function, they will give you the rate like 2000 rupees per plate. 2000 rupees per plate. What does this 2000 rupees per plate means? Are they only giving food? This wedding will happen in some premises. भाई शादी फंक्शन तो किसी प्रॉपर्टी में होगा ना, किसी बिल्डिंग में होगा ना, फ्लोर पे होगा. So what is meant by 2000 rupees per plate and minimum guarantee 100 guests? So it means this 2000 per plate, minimum guarantee 100 guests means 2 lakh rupees, right? It includes your property charges, hall charges. It includes decoration. It includes furniture. It includes cutleries. It includes food. It includes parking, right? So in this case, the ancillary services is more significant in comparison to whole only. Other case, let's say, if some marriage needs to be, some marriage function has to be, arranged in a banquet, the food is poor. The whole is very good. Will anyone like to arrange? Will anyone like to engage that banquet for the purpose of
No.
marriage? No, no one.
No.
Right? Because this ancillary services plays a very important role here. It's a significant aspect. So friends, standard says that in addition to leasing the property, if the ancillary services are significant, like in case of a banquet, in case of a hotel, in that case, the property is not classified as an investment property. The property is classified as a property, plant and equipment, right? So this is one of the guidance, one of the clarification, one of the concept will be given in the standard, right? In your examination purposes, it will be very much clear. It will be given to you. The only thing is your preparation should be super solid. You will be able to understand if the concept of ancillary services is there. If the services plays an important role, then it is not an investment property. That building will be classified as a PP. The question will make it very clear. The question will say that A Limited has purchased a building, okay, for the purpose of earning rentals. A Limited, people are coming and staying in A Limited building. Why? Because they are giving a package of services. They have a good food, very good ambience, right? They have invited, when they are getting when they are getting this property constructed, they have invited the workers, they have invited I would say, contractors from Jaipur. So they converted it into like a fort, okay? They have an amazing swimming pool, and their food is amazing, right? They have a gym, and people are enjoying. So all the guests are enjoying whenever they come and visit to this building. They will enjoy a lot, and this company is only charging 5,000 per room per night. Okay. So in this case, friends, what will happen in this case? The question is telling you that they are giving a package of services. They are giving the ancillary services, which is significant, and hence the classification would be PP, not the investment property. So our case, in that case, if a Ginger Hotel, right? If there is a Ginger Hotel, so they are into hotel business. For example, there are two ways. Let's talk about Ginger Hotel. Let's say the company is a Ginger Hotels Private Limited. They have a hotel in Jammu. When you go to Jammu, so you will find this hotel, Ginger Hotel, near to Jammu railway station. So you will find a building in the name of Ginger Hotel. Okay. Now, the owner, I mean to say, the company which is holding this building, either the company will purchase the building or the company will take the building on a lease basis for the purpose of running hotel. If the company has purchased the building, what would be the classification? Since it is a hotel, the company is not only giving a room, the company is also giving a bunch of services. Ancillary services are playing an important role in selling the rooms, right? So in this case, if they are giving ancillary services, which is significant, in that case, it will be classified as a PP. But let's say guest house, the guest house is there, right? And they are only giving you the room, okay? No other services are there. They are only giving the property, no other services are there. No breakfast, no food, right? Nothing. Just you need to stay. You have to manage everything at your own. Okay. They will give you room and washroom. That's all. In that case, ancillary services are not significant. In that case, it will be covered as an investment property, right? Is that clear? Generally, in case of a hotels,
Yes.
in case of hotels, generally, they will classify it as a PPE. Okay. So Vignesh is saying, sir, if ancillary services are insignificant, then the property will be classified as investment property. If it is significant, then it will be classified as a PPE. Absolutely right. Okay. Coming to the recognition, same concept, same which we have read in PPE. So investment property, land and building should be recognized as an asset when future economic benefit is probable and cost can be measured reliably. Sir, what is the initial measurement of investment property? Investment property has to be measured initially at cost. Cost means purchase price plus क्या investment property में कोई import duty होगी? Will there be any import duty on investment property? Will you be able to import building or land? Sir, I have purchased a building from London. I have purchased a land from London. मैंने लंदन से एक लैंड परचेज की है इंडिया में. You remember when we discussed the cost part in PP, cost includes purchase price plus import duty plus non-refundable taxes minus trade discount and rebate. So whether any import duty will be there in investment property? Chini, how import duty will be there in investment property? Can you please unmute and explain?
Sorry, sir. Actually, my answer not related to this question.
Okay, no worries. But partially you are right, Ginny. You know how? So while land and building cannot be imported, okay, land and building, so it's a non-movable asset, okay.
Yes, sir.
But you can construct a building over the land. If you
Yes,
are constructing a building over the land and you are importing the marble from Turkey, okay,
Yes.
you are importing the sand from Dubai. So in that case, import duty will be there on the material material which you are importing for the purpose of constructing the investment property.
Okay,
Correct?
sir.
Correct. Not land and building. But if you are constructing a building and building construct करते हैं तो material तो purchase कर सकते हैं ना, sanitary item. आप तो purchase कर सकते हो ना, import कर सकते हो sanitary item.
Yes, sir.
Mr. Ambani has not used any, any indigenous material or any domestic material for their Antilia. They have purchased this building material from outside India. They have paid huge import duties. So what is the cost of that house? The cost of house is material plus labor plus overheads, right? वही तो हो गया ना, cost of construction. So friends, investment property like PP has to be initially measured at cost. What is the definition? Purchase price plus import duty plus non-refundable taxes minus trade discount and rebate. When it talks about import duty, so don't get confused. Sir, building को कैसे import करेंगे? Land को कैसे import करेंगे? That import duties was in respect of when you are purchasing some material, importing some material for the purpose of construction of investment property, right? Plus directly attributable cost, plus directly attributable cost, plus directly attributable cost. What is meant by directly attributable cost? Transaction cost. For example, you have purchased a land and building. What you will pay? You will pay some broker commission. You will pay stamp duty. You will pay lawyer charges. You will pay professional fee. Correct? So these will be your transaction cost. And what cost should not be included? You remember in PP, I have told you if there are abnormal losses, it will not form part of your cost of PP. Initial operating losses. You have started a factory and initially you have operating losses. So that go to P&L. That is not form part of your PP. Likewise, it does not form part of your investment property. Sir, if I have purchased a building, constructed a building or purchased a building, and subsequently there is a major cost. I have purchased a building for 20 lakhs and after 10 years, I have changed the entire walls of that building. I have renovated the entire walls of that building and it took a huge cost, major cost in that building. So what is the treatment of that cost? Will it be capitalized or will it be charged to P&L?
One has to check if it increases the value of the building or the utility or the benefit, utility of the building.
So basically, you remember in PP, we have understood that if there is a subsequent cost which is happening, which is, what is the subsequent cost? Major cost. right? Major replacement cost, major overhaul cost, major inspection cost, right? We talked about these three aspects: major replacement, major overhaul, major inspection cost. That cost needs to be capitalized and the earlier cost needs to be decapitalized. You remember, we have done one example of machine and turbine. We have done one example of truck and engine. You remember that example, Nisha?
Yes, sir.
Yes. So likewise, so the concept is same. The concept is same. When you are reading PPE standard, if you remember that land and building held for capital appreciation and rental purposes, your investment property standard is already completed. Right? So the standard says that if you are incurring a major replacement cost or a major maintenance cost in case of investment property, that major cost needs to be capitalized and the earlier cost needs to be decapitalized. भाई दीवारें तो पहले भी थी ना जब बिल्डिंग खरीदी थी, अब मुझे दीवार तोड़कर नई बनानी पड़ रही है. The walls I need to repair and I am incurring a major expenditure. Standard says that you need to de-recognize the earlier cost and you need to recognize the current cost, capitalize the current cost. Sir, but how can I be able to know about what is the cost of that asset? What is the cost of that component? Standard says that if you are not aware about the cost of the component, not to worry. What is the current cost? For example, you spend 10 lakh rupees. When you have acquired the asset, for example, 5 years ago. So discount this 10 lakh rupees 5 years ago. For example, at the rate of 10%, the value will come out like a 6 lakh rupees. So you need to assume that the value of this component 5 years ago was 6 lakh rupees. Then compute the depreciation, right? For example, the total life of the asset was 20 years. So it means you have depreciated the 6 lakh rupees component, divide by 20, multiply by 5, then you got the carrying value. So whatever is the carrying value, that carrying value needs to be de-recognized, decapitalized, and the new value needs to be capitalized. I hope it is clear to everyone. Just I'm repeating the concept of PPE. If you want to understand the concept of subsequent cost in detail, you can refer the video lecture on Ind AS 16. Okay. Right. So friends, this is the concept of the cost. This is the concept of the initial measurement, initial cost. So let me discuss one of the example of from the ICAI study material on this aspect. Please confirm if the study material is visible to all of you. Please confirm once the study material is visible to all of you. Illustration 1, ICAI study material, illustration number 1. X Limited owns a building which is used to earn rentals. The building has a carrying value of rupees 50 lakh. Carrying value of rupees 50 lakh. X Limited recently replaced interior walls of the building and the cost of new interior walls is rupees 5 lakh. They have incurred a huge cost, major replacement cost, and the major replacement cost of this component, not for the entire asset, of this component out of this entire building, this interior wall has been replaced and the cost is 5 lakh rupees. The original walls have a carrying amount of rupees 1 lakh. But in this question, the question has given you the carrying value of the original walls, right? Advise how X Limited should account for the above cost. This 50 lakh includes 1 lakh. This 50 lakh includes 1 lakh. Tell me, what is the revised carrying value? What is the revised carrying value of this building? What is the treatment of this 5 lakh? Whether it will go to the repair and maintenance expenditure or it is something else. Sorry?
5 lakh plus 5 lakh minus 1 lakh, sir. We will replace that 1 lakh,
Yes.
we will remove it and add 5 lakh to the 50
Under
lakhs.
the recognition principle, an entity recognizes in the carrying amount of an investment property the cost of replacing part of an existing investment property at the time that cost is incurred. If the recognition criteria are met, future economic benefit cost can be measured reliably. Recognition criteria तो हमेशा met होगा. आपकी गाड़ी है, अगर आप सर्विस नहीं कराओगे तो गाड़ी नहीं चलेगी. Even the 10,000 rupee will meet your recognition criteria, but it is not a major cost. It is a small repair cost, right? So recognition criteria will always met and are met, and the carrying amount of those parts that are replaced is derecognized. So X Limited should add the cost of new walls and remove the carrying amount of the old walls. The new carrying amount of the building is 50 lakh plus 5 lakh minus 1 lakh, right? So this is what we have covered. Okay. This is what we have covered as a illustration number 1. For detail, subsequent cost recognition and derecognition, for detail, you can refer the video of Ind AS 16, where I have already covered this aspect from ICAI study material in detail and one of the example in my Excel file. Okay. I hope that is clear. Okay, my dear friends, let's go to the PowerPoint presentation once again. So I would like to stay on this ICAI study material only. Okay. So cost, we discussed that the PP, the investment property has to be measured at cost, which is purchase price plus any directly attributable cost. For example, professional fee, property transfer taxes, other transaction costs, etc. Let's discuss illustration number 2. Netravati Limited purchased a commercial office space as an investment property in the Global Trade Commercial Complex for rupees 5 crores. However, for purchasing the same, the company had to obtain membership of this commercial complex association by paying 6,25,000 as a one-time joining fee. However, for purchasing the same means this 6,25,000 rupees fee is getting incurred. Why? Because this company wants to purchase a space, purchase an investment property in this complex. So whether this 6,25,000 is a directly attributable cost or not?
Yes, sir, it is directly attributable.
Why you are saying it is directly attributable?
If in case I'm not purchasing it, I don't take the membership of that
Very good.
complex.
Very good. I was expecting this answer in such a layman language that I would not have incurred this one-time fee, this membership fee, if I would not have to purchase this property, right? So it means this cost would have been avoided if this purchase of asset would have been avoided. So it is directly related to the purchase of the asset, right? And hence it is a directly attributable cost. It is a directly attributable cost. Okay. So yes, so in our mind, when we were reading this question for the purpose of solving in examination, so one thing is clear in our mind: 5 crore cost of asset, then 6,25,000 one-time joining fee, directly attributable cost. So it is running in our mind the total cost 5 crore 6,25,000. Netravati Limited wants to write off the one-time joining fee as an expense under membership and subscription charges and value the investment property at rupees 5 crore. See, what we have concluded till this paragraph, the company's accountant has done something reverse in the next line, right? Comment whether your answer will change if the office space was purchased with the intention of using it as an administrative center of the company. So in the first paragraph, the question is asking you to advise, batao theek hai ya nahi hai. In the second paragraph, the question is asking whether your answer will change if the office space was purchased for the purpose of using in own business purposes. So in the first paragraph, it talks about the investment property, means this asset was purchased, this building was purchased for the purpose of capital appreciation or rental. In the second paragraph, the question asking you that whether your answer will change if it is used for the business purposes, if it is used for the PP purposes.
No, sir.
So what is your answer? What should be the cost?
Whatever it is directly attributable cost. So I will capitalize it because it is one time also.
Yes, you are right. So basically you need to write your answer in a way. In the first case, since this commercial complex is an investment property has to be measured at cost, which is purchase price plus directly attributable cost. In this case, this 6,25,000 of joining fee one-time joining fee will be considered as a directly attributable cost because this is getting incurred. This is the precondition. This joining fee is a precondition to purchase this asset. And hence the cost of investment property is equal to purchase price plus joining fee, 5 crore plus 6,25,000, 5 crore 6,25,000. Hence, charging this joining fee under the membership and subscription charges in P&L is not right. It has to be capitalized. Now you come to the second answer. If the company is using this property for business purposes, for administrative purposes, then it has to be classified as property, plant and equipment. Even in property, plant and equipment, PPE is recognized, PPE is measured at cost. Cost includes purchase price plus directly attributable cost. So even in this case, the value will not change even if it is a PPE, and hence this PPE has to be measured at 5 crore 6,25,000 rupees. Correct? Perfectly fine. Are you perfectly fine with the answer? Yes? Okay. Okay. Let's go to the next question. Illustration number 3. X Limited purchased a building for rupees 30 lakh on 1st May 2001. The way I am reading question, you have to read question in that way only. X Limited purchased a building, while the today agenda is investment property. So you must be aware that everything, whatever you talk, it is going to talk about investment property. But what happens in the exam, where you will get the question from 39 Ind AS, right? So how can I read and interpret this question? So just hear me out. X Limited purchased. Oh, purchased means honor. Purchased. Okay. A building. Purchased a building. Okay. Either it could be PP or investment property or could be something else. Let's see. For rupees 30 lakh. Okay. 30 lakh is the purchase price. Date of purchase is 1st May 2001 with an intention to earn rentals. Okay. So intent is to earn rental means this is an investment property because it is a building. The purchase price is 30 lakh. Date of purchase is 1st May 2001. The purchase price was funded by a loan, interest on which is payable at the rate of 5%. Okay, it is talking about some borrowing cost. So this building was purchased by a loan and interest payable is 5%. So 30 lakh multiplied by 5%. Almost which is 1.5 lakh per annum. Okay. Property transfer taxes and direct legal cost of rupees 1 lakh and 20,000 respectively were incurred in acquiring the building. Okay, these are the directly attributable cost, property transfer taxes and direct legal cost. Okay. So this has to be added to the cost of the asset. X Limited redeveloped the building into retail shops for rent under operating leases to independent third parties. So this building was redeveloped by X Limited. Okay. Why? Because they have to, because this X Limited is redeveloping this building into retail shops, which they will give under the operating leases to earn rentals to the various parties. Expenditure on redevelopment were, so some redevelopment expenditure were also given. 2 lakh rupees of planning permission, 7 lakh rupees construction cost, including 40,000 rupees refundable purchase taxes. 7 लाख रुपए का इन्होंने सीमेंट खरीदा, सैंड खरीदी, सीमेंट खरीदा, ब्रिक्स खरीदी, उसमें जो भी जीएसटी लगा 40,000 is a refundable GST. Okay. So 30 lakh purchase price, it is talking about 1 lakh rupees and 20,000 directly attributable cost. There is a 2 lakh rupees of directly attributable cost also, 7 lakh rupees of cost also, but 40,000 is refundable. So 7 lakh minus 40,000 is the cost. It is also talking about some borrowing cost. So borrowing cost has to be capitalized on a qualifying asset, right? Ind AS 23. So let's go to the next part. The building does not qualify the substantial period criteria for redevelopment of property under Ind AS 23. ये क्या हो गया? What this has happened? The building is not a qualifying asset. Sorry.
No borrowing cost.
No borrowing cost. So borrowing cost will be there, but it will be charged to P&L. No borrowing cost will form part of the cost of this building, right? Compute the cost of the building under Ind AS 40. Friends, tell me, the way I have read this question, the solution I have already provided. Yes or no?
Yes, sir.
Yeah? Are you agree or you disagree?
Agreed, sir.
So solution, when I was reading the question step by step, while taking some pauses, I have already answered this question. So, but let's formally answer this question. So what is the cost of investment properties purchase price plus directly attributable cost? Okay. So in this case, what is my purchase price? 30 lakh, property transfer taxes, direct legal cost, fee for planning permission, construction cost, non-refundable taxes is a cost of asset, but refundable taxes are, of course, it is not a cost to the company. So this is the cost of building as per Ind AS 40. Since building does not qualify the substantial credit criteria for qualifying asset, and hence borrowing cost on the loan is charged to the P&L. It is not going to be capitalized, right? So this is what we have discussed in this question relating to the cost of the asset. Correct? Friends, it's 8:36 now. Let's have a 10 minutes break and we'll start at 8:46. I hope you guys have been well understood, well versed with the concept which I have explained you so far. I am also repeating the concept of Ind AS 40, Ind AS 16. So you are getting a revision of Ind AS 16 also. Okay. So let's have a 10 minutes break. We'll meet you after 10 minutes at 8:46. Break, Mr. Ashok. illustration number 4. Friends, you remember we had discussed the concept of deferred payments in Ind AS 16 and Ind AS 38.
Yes, sir.
Can you please explain the concept of deferred payment?
When there is a time period between the asset purchase and the actual payment, and if that period is more than 12 months, then we can say that there is a finance component or say interest component in that transaction. So we have to compute a cash price and total payment. We have to reduce that cash price, so we get the interest amount.
Very good, well explained. So the only gap between the actual and your explanation is that 12 months, right? So standard does not talks about 12 months. From the perspective of Ind AS 16, Ind AS 38, Ind AS 40, 12 month नहीं लिखा हुआ. But the other explanation are exactly same, right? So the standard says that whenever the company is purchasing the asset on a deferred payment basis, for example, the company has purchased a building, okay, investment property, and the company has told seller that I don't right now, I can only pay you 50%, and the remaining 50% I'll pay you after 6 months. Okay. So the seller will say that, okay, in that case, I will charge you 1 crore 10 lakh rupees for this building. Then I told the seller, but you have quoted 1 crore rupees, not 1 crore 10 lakh rupees. Then the seller told me that, my dear Alok, so you are not paying me the money in front, upfront, okay? If you would have to pay me right now, it is 1 crore. It is still 1 crore, okay? Because when you pay me, I'll get the money and I'll invest the money in some other projects, okay? I'll get the return. But since you are not paying me 50 lakh rupees right now, I have to borrow this 50 lakh rupees from someone else and I have to pay the interest to them. Okay. So it means when the company is buying an investment property, intangible asset or PP on a deferred payment terms, means not on a normal credit terms, on a deferred payment terms. Okay. In that case, whatever is the cash price equivalent, so the PP, investment property and intangible asset, please mind my words. I'm not only talking about investment property. मैं क्या यूज कर रहा हूं? मैं तीनों चीजें यूज कर रहा हूं. PP, investment property or intangible asset. It has to be measured at cash price equivalent. The difference between the total consideration paid or payable minus cash price equivalent will go to interest cost, right? This interest cost will be capitalized if it is a qualifying asset. It will charge to P&L if it is not a qualifying asset. Correct? Clear? Is that clear? So friends, why I am giving you a focus here? So don't focus only about 12 months. Okay. The standard will give you, and don't only focused about that if the payment is in delay, right? The question will tell you the company like XYZ Limited has purchased a building for rupees 1 crore. And normally it took around 2 months or 3 months for converting or materializing a deal in case of real estate purchases and sales. So the question is telling you that, the company has entered into an agreement to sell on 1st January and the registry got happened on 1st April and the company has paid the entire money after 3 months of credit, which is on 1st April. So question में सारी बातें लिखी हुई है. And the question says that normally it took 3 months to get this kind of deals closed. Okay. So what does it mean? While the company is paying in delay by 3 months, but whether this 3 month is a deferred settlement terms or this 3 month is a normal credit term.
Normal credit.
This 3 month is a normal credit term. So my dear students, just focus on the question. If the company is not paying upfront, the company is paying in the normal credit terms, right? In that case, you are not required to recognize any finance component. Whatever consideration the company is paying, it is a cash price equivalent under the normal credit terms, right? But if the question will tell you the entity is paying in delay or the entity wants to settle on a deferred payment terms, in that case, you have to identify the finance component and it has to be either capitalized or it has to be charged to the P&L as an interest cost. Okay. But to cut a long story short, in case of a deferred payments, the difference between the total consideration paid or payable minus cash price equivalent will go to the finance cost. Okay. Illustration number 4. X Limited purchased a land worth ₹1 crore. It has option either to pay full amount at the time of purchase or pay for it over 2 years for a total cost of 1 crore 20 lakh rupees. Determine the cost of building under both the payment methods. Tell me, what is the cost of this cost of this land, not a building? See, there is a technical error in this question. So in the question, the first part is land, right? And it is talking about the cost of the building. So consider it as a cost of land. Okay. Tell me, on the upfront basis and on the delay basis, that is over a period of 2 years. So in both the cases, what is the cost of the land? In both the cases, the cost of the land is 1 crore. But in the second case, what is the treatment of 20 lakh? Because the company is paying 1.2 crore. What is the treatment of 20 lakh? 20 lakh is the interest expenses. Interest expenses. You are right, Nisha. It is an interest expenses. Okay. Great. So we have covered this deferred payments part also, right? What about exchange of assets? What about exchange of assets? Can anyone tell me what about exchange of assets? You are acquiring an investment property. You are acquiring an investment property. Okay. In return of, you are paying a PP. You are paying a PP. So what is the cost of investment property acquired?
Cost of PP.
Fair value of PP.
Fair value of PP means fair value of asset given up. Fair value of asset given up, right? So let's discuss this example from ICAI study material. Sun Limited acquired a building. I don't know it is a investment property or a PP. I don't know. So I will be able to know when I'll move more into this question. In exchange of a warehouse, it is giving warehouse. For sure, warehouse is PP, whose fair value is ₹5 lakh and a payment of cash is ₹2 lakh. So fair value of warehouse is given 5 lakh and payment of cash 2 lakh. So this company is acquiring a building. In return of a building, this company is giving a non-monetary asset and a monetary asset. This company is giving a PP and a cash. Okay. The fair value of both the asset is there. Fair value of PP is 5 lakh. Fair value of cash is of course 2 lakh rupees, right? The company decided to keep that building for rental purposes. You remember when I started this question, I told, I don't know what is this building, PP or investment property, but now I'm clear. The company decided to keep that building for rental purposes. I'm clear. So this building is your investment property. This building is investment property. Okay. This building is investment property. The fair value of the building received by the company is ₹8 lakh. Fair value of the asset given up is there. Fair value of the asset acquired is also there. The building is acquired with the purpose to earn rentals. Hence, it is a case of investment property acquired in exchange for a combination of monetary and non-monetary asset. At what value this investment property is going to be measured? At what value?
7 lakh.
7 lakh. What is 7 lakh? Fair value of asset given up. So what is the accounting entry? Investment property account debit 7 lakh, to cash 2 lakh, to PP 5 lakh. Correct? So my dear friends, if there is a commercial substance exists, your asset acquired, investment property acquired will be measured at fair value. Which fair value? It will always be fair value of asset given up. What happens if the fair value of asset given up is not there? It is fair value of asset acquired. What happens if both the fair values are given? Fair value of asset given up will be used. Right? What happens if both the fair values are not given? then WDV of the asset given up becomes the
Given up.
value of the asset acquired, right? We read this concept 3 times. We read the same concept in Ind AS 16. We again repeated the same concept in Ind AS 38. We repeated the same concept again in Ind AS 40. So friends, when you will do the revision, okay, so when you read the other standard will keep on the revision of the earlier standard itself, right? So just read the standard in a constructive manner. Read the standard in a constructive manner, okay? Right? Okay, so now let's move to the PPT. Initial measurement we have covered. PP has to be initially measured at cost. Cost includes purchase price plus directly attributable cost. Okay. Abnormal losses, startup cost like advertisement, brand promotion, this is not going to be capitalized. Okay. If the investment property is purchased on a deferred payment terms, so it has to be measured at cash price equivalent. If investment property is acquired in exchange of an asset, it has to be measured at fair value of asset given up. That is the first priority. If not, then asset acquired. If not, then WDV of the asset given up. Friends, subsequent measurement is very simple in case of investment property. Very, very, very simple. What was the model we have learned in Ind AS 16 and Ind AS 38 for subsequent measurement? There were 2 models I have talked about. Which model?
Cost and revaluation.
Cost and revaluation model.
And fair value.
Cost and revaluation model. Revaluation is fair value. Revaluation is fair value. Okay. Cost and fair value model. But the name of the model is revaluation model. Okay, Abrakesh? We talked about cost model. We talked about revaluation model. We understood in case of cost model, my gross block is always original cost, right? But in case of revaluation model, my gross block keep on changing, right? मेरा gross block बदलता रहता है ना? कैसे? My gross block will become a fair value on the reporting date, correct? जब भी आप fair value करोगे, तो क्या होगा? आपका gross block change हो जाएगा. You remember carrying amount is equal to revalued amount minus subsequent accumulated depreciation minus subsequent accumulated impairment losses. In case of a cost model, your carrying value will be calculated by gross block minus accumulated depreciation minus accumulated impairment losses. Friends, then we discussed about revaluation. Cost model was very simple. Cost में से आपको depreciation कम करना है, impairment loss कम करना है, बहुत simple था. In revaluation model, we discussed a lot of aspect. In revaluation model, we have seen a lot of aspect. Sir, what is the treatment of revaluation surplus? When you measure your PP or intangible asset at fair value, there is a difference between the carrying value and fair value. If the difference is on the higher side, means your fair value is more than the carrying value, there is a revaluation surplus. If the fair value is less than the carrying value, it is an impairment loss. If there is a revaluation surplus, it will go to OCI. Okay. And subsequently, your depreciation will be on the revalued amount. Sir, what is the treatment of revaluation surplus? So revaluation surplus has to transfer to the retained earning. So we discussed a lot of concept. And whenever the company has opted for a revaluation model or a cost model, it has to be the same and consistent for a class of asset. Are you able to remember all those concepts?
Yes.
But investment property is very simple. It says that in case of subsequent measurement, you have only one model. Which model?
Cost model.
Cost model. There is no revaluation model in investment property. No revaluation model in investment property. Nothing. Zero. No revaluation model. You have to carry your investment property at cost model. Sir, what does it mean? It means, for example, A Limited has purchased a building for rupees 50 lakh on 1st April 2023. The life of the building is 50 years. Compute the carrying value of the building as on 31st March 2024. बताइए क्या carrying value होगी building की 31st March 24 पे? What is the carrying value? 50 lakh is the cost. 1st April 23, building was purchased. Cost was 50 lakh. Life is 50 year. What is the depreciation for first year?
1 lakh.
1
1
lakh,
50
sir.
divided by
1 lakh. Very good. So what is the carrying value in case of cost model? Original cost minus accumulated depreciation minus accumulated impairment loss. What is my original cost? 50 lakh. What is my accumulated depreciation? Of course, depreciation for the first year, 1 lakh. There is any impairment losses? As per this example, no. So 50 minus 1, 49 lakh is the carrying value of this investment property. Same concept what we have learned in Ind AS 16 and Ind AS 38. It's absolutely same concept. Okay. Friends, this fair value model, revaluation model was there in IFRS, but not in Ind AS. We have taken a carve out. We have not allowed this revaluation model for investment property in Ind AS, right? But fair value disclosure is allowed, but fair value disclosure is required in case of investment property. Fair value disclosure is required, right? So from the accounting perspective, revaluation model is not allowed, but from the disclosure perspective, if the company has an investment property which is held for capital appreciation or rental, the company needs to disclose the fair value of that investment property in the notes to accounts, right? Okay, so always remember, revaluation model is not there from the accounting purpose, but from the disclosure purpose, fair value of investment property is required to be disclosed. And again, I am leaking the second question in interview. Whenever I am taking interview of fresher chartered accountant, this is my favorite question which I used to ask. Tell me, a company has purchased an investment property. Even I am not using the word investment property. I generally asked that a company, let's say my company in which you came for interview, we have purchased a building for the purpose of earning rental, right? The cost is 50 lakh rupees and we want to follow revaluation model because my fair value of the building is 1 crore. Can I do that? So first, the student need to think about, okay, this building is for rental purpose, so it is not a PP, it is an investment property. Okay, if it is an investment property, revaluation model is not allowed, right? So if the student has done FR very well, understood financial reporting very well, he will answer, sir, this is an investment property. In investment property, revaluation model is not there. Then my second question will be, okay, so then what is the benefit of this fair value? Do I need to do with this fair value anything in my financial statement? If student is smart, he will tell me, sir, in investment property, this fair value of 1 crore will be used only for the purpose of disclosure in the notes to accounts, right? And that candidate will get selected. Because if he know such a minute detail, if he is able to remember such a minute detail, it means he is a great student. Okay. Have you understood? So Ginny, I have leaked the second question also. Cost model, measure at cost. Cost model will apply same like in Ind AS 16, depreciated every reporting period. Impairment testing will also be required. Cost is equal to carrying value is equal to cost minus accumulated depreciation minus accumulated impairment losses. Fair value is only required to be disclosed in the notes to accounts. Okay, in the notes to accounts. Friends, so let me see if there is any question in ICAI study material on this. So let's discuss that question. Then we'll move to the next concept. So illustration number 5, I'll cover after explaining this concept. So let me explain this concept, then I'll cover illustration number 5. Okay. Friends, now the standard is talking about, so we discussed initial measurement, we discussed subsequent measurement. Now standard is talking about transfers to and from investment property, right? For example, in COVID days, so in COVID days, this work from home started and many companies have vacated the rental premises. For example, if I have a rental premises, okay, and in one premises I have kept for earning rentals, and in the second premises I am running my factory. Since my rental premises has vacated. So when it was a rental premises, it was an investment property. But when it got vacated, right, and there is no tenant who wants to come in because the demand is not there. So I decided to use this rental premises as my own business. Okay. So when I decided to use this rental premises in my own business, what is the classification of that premises? Which earlier I kept for rental purpose, but now I want to run my business in that premises.
Earlier it
PP.
was investment property, now it has become PP.
Earlier it was an investment property, now it becomes a PPE. Very good. Very good. Now the question comes, sir, earlier it was an investment property, now it becomes a PPE. For example, this investment property was purchased on 1st April 2021, and the company has decided to use this investment property as a PP on 1st April 2024. Sir, what is the treatment? What is the treatment for derecognition of investment property and recognition of PP? What is the treatment of this transfer? Okay, so we'll talk about that. Second example, the company was a DLF Limited, real estate business. DLF Limited is dealing in sale and purchase of land and building. DLF Limited has 5 buildings in which DLF is carrying its own office. Okay. 5 buildings. Now, due to some decline in the business, DLF is facing some cost cutting scenarios. So now these 5 buildings, so buildings are inventory for DLF, but these 5 buildings which DLF used for its own business purposes, where the DLF staff is sitting. So this 5 building, what is the nature of this 5 building? PP. The nature of this 5 building is PP. Correct?
Inventory.
In this nature of this 5 building in which the DLF staff is sitting.
Oh,
It is a
staff
business
is sitting
purpose.
in
Yes.
PP. Yes, sir.
PP.
Yes.
Right? And there are 2 buildings also where DLF is earning rental. Not for the selling purposes, but for earning rental purposes. There are 2 buildings also where DLF is earning rental. What is the nature of those 2 buildings?
Investment property.
Investment property. So friends, since DLF is running into cash crunch, now DLF decided to sell those 2 buildings also. Right? And DLF is into the business of sale and purchase of building. So DLF has got this building vacated from the tenant, and DLF now wants to sell this building. So earlier it was investment property. Now what will be the nature of this building?
Inventory.
Inventory, because DLF is into the business of sale and purchase of this building, it becomes an inventory, right? So because DLF wants to trade into this, okay, or vice versa. Earlier company was using the building for the purpose of its own business. It was a PP. Now the company has decided to lease out that building for earning rentals. So it is moving from PPE to investment property, right? Earlier, the company's objective was to use or held that building earlier, the company has held that building for the purpose of sale in the ordinary course of business. Now the company has decided, no. I don't want to sell this building. I want to use this building for rental purpose. So earlier it was inventory. Now it will become investment property, right? So friends, in case of transfer to other assets from investment property or transfer from other assets to investment property, what will be the deemed cost? What will be the deemed cost? So please go on mute. Can you please go on mute? Friends, can you mute yourself? Yes. Standard says that if it is a PPE which is transferred to investment property, the carrying value of the PPE will become the opening value of the investment property. If it is an inventory which is transferred to investment property, the carrying value of the inventory will become value of investment property, right? If there is an investment property which is transferred to PP, the carrying value of investment property will become opening value of PP. If there is an investment property which is transferred to inventory, the carrying value of investment property will become the opening value of inventory, right? Is that clear? So friends, now let me tell you how these companies or people are planning. For example, you remember my interview question where I was asked, I have kept one building for a rental purpose. The cost is 50 lakh rupees. The market value is 1 crore rupees. So can I opt for a revaluation model? And you told me no. Why? Because it is an investment property. You need to disclose the fair value. Friends, I need to strengthen my balance sheet. I have a lot of investment properties in my books of accounts. I need to strengthen my balance sheet because my fair value of investment property has gone up, substantially. मेरी जो फेयर वैल्यू इन्वेस्टमेंट प्रॉपर्टी की बहुत ज्यादा बढ़ गई है और मुझे वैल्यू बढ़ाकर दिखानी है. मैं वैल्यू बढ़ा के नहीं दिखा पा रहा. व्हाई? बिकॉज इट इज अ इन्वेस्टमेंट प्रॉपर्टी एंड standard does not permit me revaluation model, fair value model. What I'll do? I'll change the use of investment property. I'll change the use from rental purpose to business purpose. Okay. I will transfer this from investment property to PP once it become PP. So on the date of transfer, the closing value of investment property will become the opening value of PP. But once it will become PPE, can I opt for the revaluation model? Can I restate on the reporting date? Can I restate this PP to fair value?
Yes, sir.
Answer is yes.
Okay.
Answer is yes. So my dear friends, when you actually onboarded into a corporate life, you will find these practical scenarios where the company wants to restate, where the company wants to present the investment property on fair value. So how the company will present the investment property on fair value? The chartered accountant like you guys will be sitting in the finance department where you will advise that if you want to restate this property at fair value, first you need to change the use of this property. You need to convert it from investment property to PP. Once it will become PP, then opt for revaluation model, right? Why? Because you have a in-depth understanding of Ind AS 40 and Ind AS 16. Correct? Have you understood this? Okay, yes, Abrakesh, please ask your question.
Sir, but for these changes made, we need to disclose it in our financial statements.
Of course, yes. Of course, yes.
So from investor point of view, if we go through the notes on accounts, then we will come to know these gimmicks. Adjustment, I should say.
How does it matter?
So, I mean,
how does it matter, Abrakesh? Are you doing something wrong?
No, it's nothing wrong or right. No. It's of course it is allowed, but the change of strengthening the balance sheet will immediately come to know by the big investors.
So Abrakesh, so let me give you a mindset because I am sitting in a corporate at a senior position. Let me give you a mindset about the corporate and about the governance and about the regulators. Your financial statement should be transparent, right? So always take it into the right spirit. Right spirit. Strengthening a balance sheet is never a wrong thing. It is permitted by standard, right? But with the due disclosures. Of course, whenever a company is changing an accounting policy, right? The company has to give a lot of disclosures. It is required under Indian accounting standard. Okay. Whenever the company is doing all this stuff, that is why standard has told you. If you see the substance of this standard, at the date of transfer, on the date of transfer, this standard never told you that on the date of transfer, you can recognize the PP at fair value. Or whenever you're moving your purpose from inventory to investment property to PP, PP to inventory, the standard never talks about fair value. The standard only talks about the carrying value because this is an asset within your organization, right? The intent of the asset has been changed. The purpose of the asset has been changed. Correct? But the asset is lying with you only. So whenever you are moving from one bucket to another bucket, your carrying value should not change. Your opening value should not change. What you will do, you will do on the reporting date. And for that, once you have entered into that particular standard, you have to apply that standard. And when you apply that standard, for example, you want to fair value that particular asset. You need to fair value the entire class of the asset. You need to fair value the entire class of the asset, right? So this is how you need to apply. This is how you need to apply. This is permitted with the standard. With all due
No, permission is okay. Permission I am not denying.
Yeah.
It's a transparent and all, but from suppose I am an investor, suppose you are an investor and you are going through the balance sheet. Now you will immediately come to know that this is transfer is been made. So what is the actual position you can realize?
Yes. Absolutely yes. Absolutely yes. There is no doubt about that. Absolutely yes. One has to know and one will be able to know. Right? So Britannia Industries Limited is a classic case. See the annual report of Britannia Industries Limited, if my memory is correct, for the financial year 18-19 or 19-20. They have given the disclosure for that. They have reclassified from investment property to PP or PP from investment property. So they have given the detailed disclosure. This was the carrying value. This is the fair value. They have given the detailed disclosure. Right?
Okay. Thank you.
Okay. Yes. So my intent was to tell you that, these things, how these things are moving into corporate, how these things are actually happening in the real life, actually happening in the practical life. So you can, when you read the standard, you will be apply your mind that how these concepts have been used practically in our real corporate lives. Correct? So how these concepts are important. Okay. Correct.
Sir, it is a change in policy or change in estimates?
In Ind AS 8, I have given this example, right? Standard says that whenever the substance of the transaction is changed, whenever the economic condition is changed, substance of the transaction is changed, it will never be considered as a change in accounting policy. In this case, earlier the building was used for the rental purposes. Now the building is getting used for business purposes. The substance of the transaction the substance of the asset has been changed, and hence it will not be classified as a change in accounting policy. So it is not a retrospective application, it is a prospective application. Right? This example I have taken while discussing Ind AS 8. Correct? So this is not a change in accounting policy.
Thank you.
Okay. So friends, we discussed this accounting treatment in case of transfers from investment property to other assets. Okay. So let me take you on the Excel file and let me discuss this in detail. Okay. Yes, accounting treatment in case of transfers from investment property to other assets. A Limited has purchased a building for rental purposes on 1st April 2020 for rupees 50 lakhs. 1st April 20, 50 lakh building held for rental means investment property. The life is 50 years. On 1st October 2021, it means after 6 months. The company decided to start a business of selling of properties and wants to sell this building as well to the customer. What is the nature? From where it is moving to where?
Earlier it was investment property and now it is going to inventory.
Yes. So from 1st April 20 to 30th September 21, it was an investment property. From 1st October 21, it become an inventory from 1st October 21. Right? It become inventory. In case of transfer, the carrying value of investment property will become the opening value of inventory. Are you agree with me? Are you agree with me? This is what I've discussed. In case of transfer, the carrying value of investment property will become the opening value of the inventory. So on 1st April 20, what is the accounting entry? Tell me on 1st April 20, what is the accounting entry? When this asset was purchased?
Investment property account debit to cash or bank.
To cash or bank. Very good. Investment property building account debit to bank account 50 lakh rupees. What is the accounting entry on 31st March 2021? Sorry. So in my when I was reading the question, probably I told after 6 months, correct? It is not after 6 months. It is after 1 year, 6 months. It was purchased on 1st April 20 and it was transferred to inventory on 1st October 2021. 1 year, 6 months after, right? So on 31st March 21, what is the depreciation? Shall I
1
depreciate?
lakh.
1 lakh.
Yes.
Very good. Depreciation account debit to accumulated depreciation 1 lakh. What I'll do on 1st October till 30th September? What I need to do till 30th September? Again, I need to depreciate. आपको carrying value निकालनी पड़ेगी ना on the closing date of investment property. You need to compute the
Yes.
carrying value. What is the formula of carrying value? Cost minus
Depreciation
minus
income
impairment
tax.
losses.
Yes.
So what is the depreciation for 6 months?
50,000.
50,000 is the depreciation for 6 months. Very good. Very good. Then what is the carrying value of investment property?
49 lakhs minus 50,000. That is 48 lakhs.
48 lakh 50,000 is the carrying value of the investment property. Right? This is what it is there. Correct? This is what it is there. Perfect. Is that right? Now, what is the accounting entry on 1st October? What is the accounting entry on 1st October 2021?
Inventory account debit to investment property at carrying value 48 lakhs 50,000.
Very good. 1st October 2021. 1st October 2021. Inventory account debit. Inventory account debit. Debit. To what? To what? Investment property building account. To investment property building account. At what value? Credit. 48 lakh 50,000. Correct? 48 lakh 50,000. Any doubt? Any doubt in this question?
No.
No? Very good. Second example. A Limited has purchased a building held for rental purposes on 1st April 20 for 50 lakhs. Life is 50 years. On 1st October 21, the company decided to use this building for office purposes for its business. Now, what is the nature of this building earlier and what will be the nature after?
Earlier it was investment property. Now it is getting shifted to PP.
Very good. It is getting shifted to PP. What is the accounting entry? Same accounting entry up to 30th September 2021. Shall I repeat the same accounting entry? Shall I repeat the same accounting entry? So in case of transfer, the carrying value of IP will become the opening value of PP. Correct? अब के सेम अकाउंटिंग एंट्री रिपीट करूं मैं यहां तक तो सेम
yes sir कोई फर्क नहीं yes sir
कोई फर्क नहीं है yes what is the accounting entry on 1st October same accounting entry shall I repeat
PP we have to repeat sir
no PP
so, it will be instead of inventory it will be PP account debit what is the amount is 48 lakh
50,000
yes this will be 48 lakh 50,000 okay so I'm just giving you these notes so that when you read these notes after 3 months 4 months or 2 months you will be quickly able to remember accounting treatment in case of transfer from other assets to investment property abhi tak humne kya seekha investment property to other assets now we'll talk about the other assets to investment property for example so let's do this example A Limited is in the business of selling the properties in the ordinary course of business. The company has one land as on 30th September 2021. The cost price of the land is 50 lakhs and net realizable value is 45 lakhs. On 1st October 2021, next day, the company decided to hold the land for long-term purposes and will not sell in the short term. Tell me what was the nature earlier, what is the nature now?
Inventory, it was earlier, now it is investment property.
Till 30th September 21, it is an inventory, now it become investment property. So what is the carrying value of inventory? What is the carrying value of inventory? What is the rule of Ind AS 2?
Whichever is lower.
Yes, whichever is lower. Very good. Inventories. So in case of transfer, the carrying value of inventory will become the opening value of IP. Now, what is the carrying value of inventory? as per Ind AS 2 inventory are measured at lower of cost or NRV. Have you got some tweak here? यहाँ पर कुछ आपको गुगली मिली? If it is transferred from inventory to investment property, in that case, again for purpose of carrying value, you have to apply Ind AS 2. Ind AS 2 says that inventory has to be measured at cost or NRV, whichever is lower, right? So what is the accounting entry on 30th September 21? First of all, the cost is 50, NRV is 45. You have to take it to the NRV. On 30th September 21, impairment loss on inventory land account debit to inventory. Your carrying value of inventory will become 45 lakh. Anyone who have any problem here? Any question, any problem? Any question?
No, sir.
What is the
No,
1st
no.
October entry? 1st October को क्या entry होगी?
Investment property account debit to inventory.
Investment property account debit to inventory at 45 lakh. So on 30th September, Rahul, it is not 50 lakh, it is 5 lakh. I have only recognized the decline in the value of the inventory. Okay. When this inventory would have purchased, so let me write the other entry also. The date is not given. I'm writing XXX. The entry would be inventory account debit. Inventory account debit. Debit to. What is the entry for the purchase of inventory? To
Bank or cash.
So Rahul, I hope now it is clear to you. So it is 45 lakh. Sorry, it is 50 lakh. Right? So it is 50 lakh. So I have recognized the inventory at cost, which is 50 lakh. I have measured the carrying value on the reporting date. What I did, I booked the decline in the cost, right? So now my carrying value of inventory become 45 lakh, and this will be transferred to investment property. I hope you guys have well understood this in investment property to and from transfers.
Yes, sir.
Now let's discuss illustration number 5 of ICAI study material. Okay. Moon Limited has purchased a building on 1st April 2001 for 10 million. So what is the asset? Asset is building, date is 1st April, cost is 10 million, means 1 crore. 1 crore is the cost. The building was, again, just focus on how I am reading this question, right? I am reading this question like a student only. The building was used as a factory by the Moon Limited and was measured under a cost model. Okay. The building was used as a factory, means for the business purpose, means this building was a PP and was measured under a cost model, means original cost minus depreciation minus impairment losses. The expected useful life of the building is estimated to be 10 years. Okay. 10 year is useful life. 1 crore is the cost of the asset. It means 10 lakh rupees the depreciation every year for this PP. Due to decline in demand of the product, the company does not need the factory anymore and has rented out the building to a third party from 1st April 2005. Okay. So from the business purpose, it has shifted to the rental purpose. It means from PP, it is moving to investment property. Okay. And it is on 1st April 2005. It means after 4 years. 31st March 2, 31st March 3, 31st March 4, 31st March 5. Okay, means after 4 years. Understood. So it means up to 31st March 2005, this was a PPE. From 1st April 2005, it is transferred to investment property. Okay. So I need to compute the carrying value of this PPE as on 31st March 2005. Okay, on this date, the fair value of the building is also given in the question, 8 million. Oh, the fair value is given. Should I use this fair value?
No, sir.
No.
It only the standard gives only the cost model. And it is internal transfer.
Okay.
Carrying value.
And sir, disclosure requirement is there at the end of the financial year, and this is the beginning of the financial year when we are transferring these categories. So we don't need to use that fair value for disclosure purposes also.
Okay. So now I'm flipping the question. First of all, tell me, what is the carrying value of this PPA as on 31st March 2005?
That
6
is after
lakhs.
depreciation.
6 lakh. 10, sorry, not 6 lakh. It is
6 million.
6 million. 60 lakh.
Million.
6 million, 60 lakh, right? So instead of this fair value of the building is 8 million, instead of 8 million, if this number was written as 5 million, then what happened?
So we are not using devaluation model for that PPA. We are undergoing cost model, as the question has said.
What
So
is the
maybe-
formula of carrying value? I don't know who is speaking, Pooja or Mansi.
So depreciation and impairment loss we have also we have to be recognized, sir.
What is the formula of the carrying value? You guys, I don't know why you guys are forgetting the formula of carrying value. It is not
Cost.
only depreciation.
Yes.
Cost minus
Impairment loss.
Depreciation minus impairment loss.
Yes.
It means doesn't matter whether you are applying the cost model or you are applying the revaluation model, you have to check the impairment also. If the fair value of this building as on this date, as on this 31st March, is 5 million, what does it mean?
There is
Impairment.
a loss of 1 million.
It means there is an impairment loss of 1 million, right? तो आपका कैरिंग वैल्यू कैसे निकलेगा? आप भूल जाओ कि ट्रांसफर किया है. Forget about the transfer. In your practical life, in your real world, in your examination hall, you guys need to apply the carrying value of the formula. आपको formula पूरा लिखना है. Cost minus accumulated depreciation minus accumulated impairment losses. Always remember, don't do any conjuicy in writing the formula. Pura formula. Whenever you will write the full formula, your answer will always get corrected. Why? Because you have to put some number on that minus accumulated impairment losses, and then it will get triggered. Okay, 60 lakh, when I am reducing my accumulated depreciation, 1 crore minus 40 lakh, the value comes out at 60 lakh. But the recoverable value is only 50 lakh. Oh, it means there is an impairment loss also. So 1 crore minus 40 lakh minus 10 lakh is equal to 50 lakh. Carrying value as on 31st March 2005, as per Ind AS 16 is 50 lakh. Right? But in this question, since it is a 8 million and hence, there is no use of this 8 million, but my dear student, there is a use of this line. Okay? And your entire question will get quezzed if instead of 8 million, this would have been even 5.9 million. अगर ये 6 मिलियन से कम होता तो आपका पूरा का पूरा सॉल्यूशन गलत हो चुका होता. Okay? I hope you guys are clear. So first of all, please eliminate the myth. अपने दिमाग से myth हटा दो कि cost model में impairment loss नहीं आता. Impairment loss will always required to be checked. Okay? Thank you, Anila. Thank you for this super feedback. Thank you so much. So always see whether my carrying value after providing depreciation, is it become higher than whatever is my recoverable value? If yes, please keep it down to the recoverable value. Okay, understood, sir. Moon Limited uses cost model for accounting of its investment property. Determine the value of the building on reclassification as an investment property. So we have already solved this question. Carrying amount of this building after depreciation, 6 million, right? The company has applied cost model under Ind AS 16 till now. There is no impairment as the fair value is greater than the carrying amount of the building. Revaluation surplus to credit to the other comprehensive income, nothing. Building initially recognized as investment property, cost model Ind AS 46 million.
Sir, can we even give the accounting entry here in the answer in exam, sir?
Not required if the question has not asked for. Not required. If the question has asked for the accounting entry, always provide the accounting entry because it will also carry some marks. Okay. Is that clear? So I have covered this illustration number 5 also. So apart from my own examples in the Excel file, which is explanatory for every situation, I have also covered your 5 illustration and 1 example from ICAI study material as well. Okay. My humble request to all of you, whenever you will prep for the examination, refer those examples in Excel file, refer these videos again. It will give you conceptual clarity. And if you have a conceptual clarity, remember, my friend, doesn't matter if the question belongs to 1 page, 2 page, 3 pages, doesn't matter. You will be able to solve the answer. Doesn't matter. Okay. So, okay, now let's go to the next concept. Just allow me a minute. Okay. Let's go to the next concept. Let's go to the PowerPoint presentation again. We discussed this concept. So this is one of the questions which is given in my PowerPoint presentation. You can do this question. I've given the solution also. Now we have reached to the derecognition, disposal. When investment property is derecognized, when it is actually sold out or when it is transferred, when it is actually sold out or when it is transferred. Okay. When it is transferred also, right? So it is actually disposed of it or it is permanently withdrawn from the rental or capital appreciation use. I mean to say transferred. Okay. Whatever gain or loss is there, it has to be recognized in profit or loss. It is not required to be recognized in revenue from operations. Okay. It has to be profit or loss. Disclosure. Accounting policy is required to be disclosed. Fair value of investment property is required to be disclosed. If you are earning rental on the investment property, that rental is separately required to be disclosed. Okay. The expenses which is generated on earning rental income, it is required to be disclosed separately. Criteria used to distinguish from investment property and PP is required to be disclosed, right? So these are some disclosure requirement not relevant from the examination perspective. Let's recap. So we discussed that investment property, which is land and building held for rental or capital appreciation, is an investment property. If a company is taken any land and building for the purpose of on the lease basis and the company is paying rental, the company will create right of use asset. If the company is using that rental premises for own business purposes, it is PPE. That ROU will be classified as a PPE. And if it is for the subleasing purpose, the company is paying rental and the company is earning rental. So it is then investment property. Okay. Investment property initially measured at cost. Subsequently, it is also measured at cost model where carrying value is equal to cost minus accumulated depreciation minus accumulated impairment losses. Okay. If the investment property is acquired on a deferred payment terms, the cost of the investment property is a cash price equivalent cost. If it is an exchange of asset concept, the investment property has to be measured at fair value of the asset given up. Okay. Friends, the cost means cost includes purchase price plus directly attributable cost. This will be the cost. And as far as cost model is concerned, like PP, you have to depreciate at every reporting date. Sir, if it is a land, it is required to be depreciated.
No, sir.
Whether land has a life. So whenever depreciation, it talks about building. Okay. So impairment loss is required to be tested at the reporting date. If it is there, your fair value, recoverable value is lower than the carrying value, you have to depreciate also. No accounting policy choice for subsequent measurement using the revaluation model or cost model choice is not there, but it is there in IFRS, and we need to disclose the fair value of investment property in the notes to accounts. Under the cost model, investment property has to be measured like PP. मतलब जो PP में हमने सीखा वो यूज करना. Cost minus depreciation minus impairment losses, etc., etc. Okay. Comparison between Ind AS and IFRS, it is cut, copy, paste, except one carve out. In IFRS, revaluation model is also allowed, but in Ind AS, revaluation model is not allowed. Only disclosure is allowed, fair value. Multiple choice question. Now you need to answer this quickly. Which of the following is not an example of investment property? Not an example. Land held for undetermined future use. This is an example of investment property. Property leased to another entity under a finance lease.
Not an investment property, sir.
जब फाइनेंस लीज पे दे दिया तो बचा ही नहीं बुक्स में.
Finance.
Okay. Property leased to another entity under an operating lease. This is an example of investment property. Property being developed for future use as an investment property. This is an example of investment property. So which is not an example?
B.
B is not an example. B. Question number 2. An investment property should initially be measured at market value,
Cost.
fair value,
Cost.
NRV, cost. It is always at cost.
Cost.
Cost. If an entity uses part of a building for their own use and rents the remainder of the portion, how should this be treated? There is a dual
Option
use.
B. B.
So all as investment property, account for separately under Ind AS 16 and Ind AS 40. All under Ind AS 16, none of these. B is the
Again,
right
it
answer.
depends on separable, no, sir. Whether it can be separately registered and sold.
Yes, you are right. But given that if this is the question, the limited information is given, what is the right answer? B is the right answer. But if the subjectivity is there, you have to explain it. You have to explain. You need to account for separately if the property is able to sold separately or the property is able to given on the finance lease separately, right? If the title can be transferred separately for the portion of the assets. Entity using the cost model for investment property must also disclose the fair value of the investment property.
True. A.
Yes, true. True. It is mandatory. Cost model ये एक ही मॉडल है तो आपको fair value हमेशा disclose करनी है. Sir, whether we need to engage the registered valuer for the valuation of the investment property, answer is yes. The standard talks about registered valuer report. Investment property after recognition. After recognition means subsequent measurement. Should be measured at cost or fair value? Fair value.
Cost model. Cost
Always
model.
cost model. Yes. And this is your favorite slide. So I have completed the Ind AS 40 along with all the examples and illustration from ICAI study material and from my own questions. And I have also recapped the concept of Ind AS 40 and with this 5 MCQ as well. Yes, Abrakesh, over to you. Now, if you guys have any question, I would be happy to answer that.
Sir, in case of initial record measurement, there was a one exclusion startup cost.
Startup cost during my lecture, I have
What is
also
that?
explained, Abrakesh. For example, you have engaged a celebrity for the purpose of opening a facility. आपने एक नई बिल्डिंग खरीदी, उसका हाउस वार्मिंग किया आपने और अमिताभ बच्चन को बुलाया.
Yes, okay.
These are kind of a startup.
Got it. Got it, sir. Thank you.
Yes, Nisha, you have a question?
So my question is that now we've discussed the transfer from, say, from a PP to an investment property and vice versa. Now, the first question is, would this be treated as a reclassification?
No. As I told you, so this will not be treated as a change in accounting policy. For example, so let me take you to the Excel file and okay, so let me explain you with the help of an example. So allow me a minute. So let me explain you with the help of an example. Let's take this example. Okay. Provide the balance sheet presentation. The balance sheet presentation as on 31st March 2021 and 31st March 2022. Okay. To reflect the above situation along with the numbers. Okay, Nisha. I think this will solve your query. Balance sheet of A Limited for the, so not for the, asset 31st March 2022. There were two columns. So here the asset will be there. Then the date 31st March 22. Comparative देना होता है ना 31st March 21. Comparative is mandatory. Yes.
Yes.
So what was the nature of this asset on 31st March 2021, Nisha? In this example, what was the nature? A Limited has purchased a building held for rental purposes on 1st April 20 for rupees 50 lakh. Life is 50 year. On 1st October 21, this company has decided to use the building for office purposes. Means on 31st March 21, this building was investment property. Correct?
Yes, sir.
Investment property. And what is the value, Nisha? On 31st March 21, what is the value? On 31st March 21, 50 lakh minus 1 lakh. 49 lakhs. Very good. Very good, Vignesh. 49 lakh. Okay. Now, let's come to 31st March 2022. What is the nature of this building on 31st March 22?
It has become inventory now.
It has become property, plant and equipment, not inventory. Because in this question, the company decided to use this building for office purposes.
Office purpose, okay.
PPE. PPE. So what is the value of this PPE on 31st March 22? 1st October 21 को क्या किया था हमने? आधे साल का डेप्रिसिएशन लगाया, यही किया था ना? See this.
Yes,
48 lakh.
48 lakh 50,000 आया. और अब क्या करेंगे? अब नेक्स्ट हाफ एन ईयर का डेप्रिसिएशन लगाएंगे, हाफ ईयर का. So what is the closing value? What is the closing value as on 31st March 22?
48 lakhs, sir.
48 lakh, as simple as that. Because मॉडल तो सेम ही है ना. मॉडल तो सेम ही है. कॉस्ट मॉडल में आप कॉस्ट माइनस डेप्रिसिएशन करते हो. डेप्रिसिएशन इज ऑन द बेसिस ऑफ यूजफुल लाइफ. Right. So Nisha, this is the presentation in the balance sheet in both the years. This is how it is going to be presented. Correct.
And
So
what
when you look at 31st March 22, in PP, the comparative number will be 0. Okay. And in investment property, the current period number will be 0.
And what constitutes a reclassification? Because I was, for me, I went straight to Ind AS 1 because I was thinking about that also. So what would constitute a reclassification, like an example of a transaction, sir?
So basically, this is a reclassification, but this reclassification does not require retrospective restatement, right? You are reclassifying. From the English terminology standpoint of view, you are reclassifying one asset from investment property to PP, right? Reclassification to hai, but whether this reclassification require retrospective restatement, whether reclassification requires reclassification of previous period number, answer is no. Right? Answer.
I understand. Thank you so much.
Vignesh is asking, sir, after converting to PP, can we use revaluation model? Yes, we can use revaluation model. On the reporting date, you can use either cost model or revaluation model. But if you are using revaluation model, for example, you want to use a revaluation model for a building, office building, okay, which becomes a PP. If you have other office building also, then you have to revalue those other office building as well, because this revaluation model or cost model, whatever model you will apply, you have to opt for an entire class of asset. Consistency will be there. Okay. Any other question, my dear friends? Any other question?
No, sir.
Sir, it's not related to Ind AS 40, but just asking if there is a reclassification between two heads being inventory and PPA. In that case, also we are transferring it at carrying values.
Yes, you have to transfer it carrying values. Yes. Thank you, Ginny. Thank you for the wonderful feedback. So, and I'm glad that you enjoy my lecture always. Thank you so much. Yes. Any other question, my dear students? Okay. So no any question? Okay. So friends, if there is no any question, I would like to wrap up the class. No doubt. Let me look at if there is any question on the portal. No question on the portal also. So thank you, friends. Thank you so much. Enjoy your day and have a great day. Bye-bye. Take care. Ashok ji, session is over. Thank you, Ashok ji.
Thank you, sir. Thank you, Ashok.